Can you hear me now? Can you hear me now? Okay, good. All right, so basically all I said is I will write out a trend, but I won't necessarily write out a counter trend. I'll never write against the, be contrarian against the trend, never ever, because the trend is always bigger than the counter trend. The black line is my 20 SMA. Yes, guys, look, I'm still using the same chart. I've just taken off some other stuff. So the black line is always the 20 SMA. All right, so it's loading here. We're at 9:15. Now, what I'm going to do is I'm actually going to push play first. We're going to do a little exercise. We wanted to do this exercise for a couple of weeks. And this is what I recommend that you guys do. Now, I want you guys to speed it up. You see the double arrows here? I want you to increase it probably, let's say, between 10 and 30. Now, I want you to watch this. Let's go 10. So it doesn't move. I want you to watch the 3-minute in relation to the 1-minute. Notice here, can you see how the 3-minute is now going south of the border? And so is our 1-minute south of the border. Before that, it was kind of iffy. See, the 3-minute price action wasn't south of the border, and we had this noise. But now they're both simultaneously south of the border. Now watch what happens. Here we're going green, and we've got a little counter trend here. So the question of the day is, do I trade? Here's a very good question. Oops, let me just pause this for a second. Here's the question of the day. Notice over here that the candles are north, for the counter trend, are north of the HMA, and I could go and close the gap to the EMA, to the to the 20 SMA. But I look over here, and what do I see? Notice that my 3-minute chart is south of the HMA. So in this scenario, they're not in sync. On the prior move, this went south of the red HMA, and this was south of the red HMA. So I will be trading from this point here, from 920, 921. I'll be trading from this point here. And you can see what's also very nice is that when I see that the Linreg 9 crosses that HMA and the candle's going below it, then I know that's my opportunity to really take a high probability move. Now, if I want to trade a move like this, this is where I stay out of trouble. You have two choices. You can either forget it altogether and say, no, I'm not going to take this trade going on the counter trend because the 3-minute is still red and it's below the HMA. Or I'm going to, because it's a short-term chart, it's a 1-minute, I'm going to jump in here and just go scalp 2 ticks or 3 ticks. And if it turns on me and the 3-minute doesn't go green, then I will just bail from it. Is that clear? So this is where you can decide to scalp based on the 1-minute position and treat it as a short-lived move. If it doesn't fill your order within a very short window, then you bail as fast as you can and move on to the next one. And on these trades, you can keep your stop really tight. You can keep your stop at like 5 ticks, and then if it hits your stop, it hits your stop. But it's flat there, stay out. Well, yes, we're just talking about a counter trend trade, though. You know, a counter trend is never going to be strong angle. All counter trends are going to start off looking flat. So we're not talking about going short here, we're talking about long, going into the trend line. See, going with the direction of the trend lines, you're going on the trend, and going into the trend line, you're going on the counter trend. Okay, so let's speed this up. Let's continue. There's lots to look at. And let's see what happens. So see, look, I closed the gap. But now look, the 3 minute is going north of the HMA. And it's continuing. So we have a little bit of a reversal. So here's our perfect trade criteria. The stows are going, the MACD's crossing. Okay. But still, our 3 minutes out of sync, so it may or may not last too much longer. We'll see here in just a second. But the fact that the 3 minute is now above that HMA tells me it could go a little higher. What we're looking for next is where's the support and resistance, which you don't really see on this chart. Could go all the way up to the R4, or could bump into the 50 SMA, which, as you can see on this chart, there are my resistance points, right? It's going up to the 100 SMA. But do you notice that, look at the 3 minute chart? So if I enter here as a counter trend and decide to go for 2 ticks and watch the 3 minute chart, and if I see the 3 minutes going north of that HMA and it's the right color, now I have something that's in sync. So now I can stay the trade and grab a few more ticks. Is that clear? So you could always enter on a 1 minute counter trend, trading to the resistance point, and if you see that the 3 minute joins in and is now in the right direction, notice that my Lindbergh 9 crossed my HMA. Now you can go, well, you know what? Why take 2 or 3 ticks? I can stay and get a little bit more. Is that the 13 EMA? And no, this is the 20 SMA, guys. Let me do this. My goodness. Going to spank you with my wooden spoon. Not paying attention. Said it like 3 times already. I'm going to do this. So this chart is a scale-turned version of this chart. I've left the 20 SMA on there and the HMA. Okay? Taken off the 13, the 50, the 100, and the 200. Yes, I will spank you hard. So I'm only showing you that because I don't want the green line there. That's the reason I took the 13 EMA off. I want you to see the HMA. I don't want you to see the 13. I want you to see the HMA. This is the purpose of this exercise. So let's see when the counter trend comes in. Look, we're still going. Notice the 3 minute chart. See, and all you need to do is trade with primarily 2 charts. Whether you have a 1 and a 3 or a 1 and a 5 or a 1, 5, and 15 to give the bigger view, that's fine. But look, for this trendline basic rule, what is the rule we're discussing right now? The rule is north of the border or south of the border of the HMA color change. That's the trendline rule we are looking at for right now. This is the rule we're focusing on. So before you enter the trade, you have your 1 and your 3 minute chart up and you ask yourself, are they both north of the border or south of the border? I'm going to stay the trade. Now look, we're coming down now. Here's the 1 minute, here's the 3 minute. So can I expect this move to continue? Is this move going to continue at the moment? How many ticks would you think you're going to get on this move? Not very much, right? We hit the R4. Okay, so we hit the R4. Now notice that the 1 minute is doing a counter trend. We're going back down to close the gap to the 13 EMA. So I'm now looking, I'm trading between support, resistance and support. So I'm trading between the R4 and the moving averages. I can't expect it to go any further can't expect it to go any further until the 3-minute joins and goes below that HMA. The 3-minute changes color. So right now, if I'm going to trade at 950 here, I'm only going to treat it as a scalping trade, a 3-tick trade. And you have to follow, for all your scalping trades, you have to follow, enter in when it's 5 ticks away from the 13 EMA, okay? There's got to be that circle with a dot, or a tail, a wick with a dotted circle, and the V of the Linreg 4. This is very important. These are the 3 most important rules for counter trend. Make sure there's a V for the Linreg 4, tail, a wick with a dotted circle, and 5 ticks away from the 13 EMA. Those are the 3 most important things. So if you're going to do that, you want to make sure, can you see here, we have the asterisk, so we have the dotted circle, the Linreg made a V, and we've got to make sure that we 5 or more ticks away, so we jump in and grab 3. That's the only criteria we have to work with. If we want to go for the more, we have to wait for the 3-minute to join, and we have to wait for this bar to close, the HMA to turn red, and the candle to go below it. Right now it's not below the HMA color change. So let's see what happens when it does go below the HMA.
Something's wrong.
No, that just calm down.
Can you see how it's bouncing right now off that 13? Now it's going, see the bounce? See, look. Did everybody see that? See how we're bouncing off support? Now, for all those counter trend traders, if you did follow this rule and take your 3 ticks inside this little circle, going to the 13, and if you waited 1 more bar and you entered over here,
Where?
you just got stopped out. Voila. Welcome to the world of HFTs. You just got stopped out. And on counter trends, HFTs will kill you 99% of the time if you don't time your counter trends correctly.
I don't understand what you said.
I don't, because I witnessed it.
It's just red, right?
What do you do if the circle where the dot appears on the wick of the tail of the candle? What does that mean? It doesn't mean anything. It just means if it's above the candle, we're going short. If it's below the candle, we're going long. See here, look. Doesn't mean the position of the circle, the dot doesn't mean anything. It's just that's where the coder put it. So if we're on the bottom, it means we're going long. If we're on the top, it means we're going short. Because if we're on the top, we've hit the confirmed high. If the circle on the bottom says we may have a confirmed low. And once the circle with the dot confirms that it is the real low, it turns into an asterisk and a fractal will appear. What do you do if the circle with the dot disappears on the wick of the tail of the candle? What does that mean? If it disappears, it just means it didn't confirm. But that doesn't always necessarily mean that you can't scalp. The circle with the dot will always disappear because it has to disappear in order to become an asterisk. Sometimes it won't become an asterisk because it just didn't confirm. It said this was a maybe. The circle, it means it's like the orange light in the traffic light. You know, you're driving down the street, you see an orange light, it says we're going to stop. You just go through on an orange light, right? So the nice thing about the circle with the dot is that when it appears, there's usually enough price action to grab your scalping move, whether it disappears or sticks. It doesn't matter either way. If you time it correctly, you don't have to wait always for the asterisk to appear because then you'll be too late on counter trends. Can HFTs make the area look like a pinball machine? Yes. But now look, guys, the important message we're looking at here. What is the message we're looking at here? Let's look at this trade for a moment. If you followed the rules where would you have been trading? You would have only been doing this gap trade, period. And you would have been out, gotten your 3 ticks and out. That's it. You wouldn't have been going for the more. It couldn't, because to go for more than that, it has to be a reversal, which Barbara now calls a trend trade, right? So we have to look for the reversal criteria. And you can't do the reversal unless you see a second time frame, like a 3-minute or 5-minute, has their HMA color change. Now for currencies, I like to use the 3-minute. And for volatile markets like gold and crude oil, I like to use the 5-minute HMA color change. But notice we could have avoided the guesswork because simply we are not south of the border here and the HMA is not the right color. So we know as long as the 3-minute is not in sync with the 1-minute, we only have a scalping opportunity. I'm going to say that again. As long as the 3-minute is not south of the border in sync with the 1-minute and the right color, the HMA is green here, this is red, then we only have a scalping opportunity. Is that clear?
I would never scalp.
Do I need to repeat that for anybody?
I wouldn't do that.
No.
Is that clear? Does anybody want me to repeat that? What do you mean by south of the border? What I mean by is the candle below the HMA if we're looking to go short, or above the HMA if we're looking to go long. Do you see that these candles are not below? You see here, they're below the HMA on the 3-minute chart. If we look at the 3-minute chart, the candles here are clearly below the HMA trend line. Here, they haven't penetrated below yet. That's just because the tail pierces through, the majority of the body needs to be on the other side. That alone tells you whether you are in a trend or a counter trend. So because let's call them the 3-minute the medium term and the 1-minute the short term, because the 1-minute, the short term and the medium term are out of sync, meaning the short term it is below the HMA, but the medium term it's still above the HMA, they're out of sync. They're not in sync. That means we only have a scalping opportunity in front of us. It's a short-lived move. But let's look what happens when they speed it up. Watch what happens when they do come in sync. Can I replay the same scenario in slower speed? Yes, I will do that in just a second. You see, as long as the 3-minute is still staying the direction of that HMA, we are still in the trend long. Now, watch here. Watch the 1-minute. The 1-minute's going to go south of the HMA, the candle, majority of the body. Now, you're looking to do your counter trend. But look at the 3-minute. Can you see the 3-minute is now south of the HMA? See the majority of the bottom. That's where I would be trading. Now look there. What happens when that happens? You now have what Barbara calls your perfect trade. Look at your 1-minute MACD in your stoves. That's what she calls the trend trade. Now this is 10 o'clock. So we had that spike there because we had some news today at 10 o'clock, right? But without the news spike there, it would just smoothly go because the 3-minute is now in sync with the 1-minute chart. Can you see that? So I don't want you to be looking at fractals right now and Linregs and all of that good stuff. I just want you to look at the timing, the relationship of the candle actually closing below the HMA when it's in sync with the 3-minute chart. So can you see there is your trend now? That's your perfect reversal. Can you trade the news item if it's set up right? No, do not do bracket orders on news trades anymore. It's not a good idea. But what I would do, if I see this is red, I normally wait for the 10 o'clock and I jump in and then steal some ticks on the down. But I actually wait for the 10 o'clock to show up. I don't preset my positions as a bracket order. Most news items, because of the HFT activity, have too much whipsaw. So in the good old days, we used to do bracket orders. We used to put a position long and a position short, and we used to put the order cancel order feature on, and we used to wait for the explosion, and then it would hit one of them and fill us, and the order cancel order would cancel the other position. That's called a bracket order. We don't do that anymore. Because of the HFT activity, it's destroyed the new strategy. So now we wait usually for the explosion to happen, and then you do the counter trend when the dust settles. Or if you want to trade I usually wait for the explosion, and then I quickly jump in and steal some ticks. Sometimes I steal 3, sometimes I steal more, whatever it is. And which candle would you have entered here on the 4th in the 1 minute chart? I would have waited for this spike to happen, and I would have entered in the middle of this bar. So this spiked up, I would have entered as this bar was coming down. So the second candle. Are you suggesting we take off our moving average on the 3 minute chart? Is this just an example for, or can we trade like this? You can trade like this. You can trade the moving averages off the 3 minute. You can take the moving averages off and just use the HMA. You can. You know, I've discussed many times of taking the simplified view. This would be a very nice view to trade. Look, you have your regular chart so you can see where your everything is, and you have your 3 minute chart, because what are we primarily focusing on? We're using the rule of, are we north of the HMA or are we south of the HMA, to confirm that things are in sync. Why? Because we want to know, oh, do we have a scalping opportunity or do we have more ticks up for grabs? And if they're not in sync, as I just demonstrated, it's a scalping opportunity. And if they are, then we have more ticks up for grab. It's a trending. So when they are in sync, you're probably doing a trend trade, and when they're not, then you're doing a scalping 2 or 3 tick trade depending on your timing. So let's do this again. We're going to go back because these 2 examples are very good here to re-clarify this. Let's go back here to 9:45. So, and I'll do it slowly so you can see the scalping opportunity versus the trending opportunity. This is really important. If you get this one rule alone, if you really get this concept, guys, then you will avoid a lot of mistakes. Without having to list all the rules there is to know, you can avoid a lot of mistakes. So let's use these 2 charts like this so you can see here. Expand this out nice and big so you can see it. This is really good stuff. Keep going. Good. Okay, so I'm going to push play here, and I want you to watch the 3 minute in relation to the 1 minute. Now you know what your 1 minute, you know what your strategies are. You're either looking for a gap trade, a clear trade, or a reversal. A trend trade, which Barbara calls a trend trade, but it's actually a reversal trade. Yeah? That's her version of a trend counter trend. She likes to call it a trend trade, but it's actually a reversal trade. But it's the same thing. It's good enough for me. Yeah? It's the trend developing on the trend change, basically. Now here we are. We're still in the trend. It's very obvious that we're in the trend. I'm just going to speed it up a little bit so we're not sitting here forever. Okay, here we are. Now you know you're not going to trade anymore because we're at resistance, which I'll cover next week. I'll talk about pivots next week. But for right now, you should have made your money already. You should have traded, if you're doing the clear trade, you should have traded from the 13 from here to there, made your money, and now you're out. You hit resistance, you're out. There's the circle with a dot, there's your fractal, you're out. Now, can you see that the 3-minute is still north of the HMA? We're north of the border, so I don't have a trade yet. Now I have the circle with a dot. I could have a scalping opportunity bouncing off the R4. For right now, all I'm thinking is I could get 3 ticks inside of a 5-tick move. That's all I'm thinking. I'm not thinking about anything else, because look at the 3-minute. The majority of the candle is not south of that HMA. I would rather wait for the close of this bar and the next bar to go below to know that I'm going to get more. So I've taken my 3 ticks. I'm out now. That's it. I don't have anything more. I know for right now, as long as this is not below that HMA, this is nothing more than a 3-tick scalping move. I'm out. I took my 3 ticks from this asterisk somewhere in here. I took it, and I'm out. I'm out. Now, the 3-minute is going below. Okay, but watch what happens. Now I have another, well, actually, this is, as you can see here, watch here. Not ready yet. Can you see? This is where the HFTs come here. This is an HFT whipsaw. Not ready yet. So I would always, if you want to make sure that you're going to do a reversal on the counter trend, I would always wait for this bar to close. You got to get in quick. Yes. For scalping, if you're not a fast trader, if you're a hesitant trader, then you cannot scalp in those moves. You want to wait for this 3-minute to close. You want to wait for this 3-minute to close. Then you better, if you're going to do the counter trend, you're better off doing trend trades. If you're a nervous hesitant trader and you're humming hard a little bit, you're better off doing trend trades or waiting for the 3-minute bar to close below that HMA before you jump in. Barbara is razor sharp on her scalping. Soon as the circle of the dot comes in, that Lundreg turns, she's in, she's got her 3 ticks. That's the only way you can scalp. If you pause just a little bit, you could be HFT'd out. So now, can you see, now the candle is really settled below. Notice that the Lundreg is crossed. Now I'm looking to get in. I'm waiting for this bar to really settle here. Now I'm looking to get in as a reversal trade. So now you can trade the counter trend, but you're doing it as a reversal trade because this bar is clearly, and notice here your HMA, you can't see it here, but look, your HMA's changed red. So this is where I will be trading my counter trend. Now this is 10 o'clock news, so we wouldn't be trading before a 10 o'clock news item. Please understand that it's a fundamental, but any other time, if it's not 10 o'clock, this would be very smooth. Okay, so we ordinarily wouldn't be doing it because it's right before 10 o'clock, but I just wanted you to see the timing of the 3-minute coming in sync. So let's watch here. Let's go into the next move and watch here to see what happens after the move happens. When scalping, do you enter at the market? You can, well, when it comes to execution, and I'll explain that in a second, you can't do what's called a level 2 entry for scalping because the price action whipsaws a lot. And for trend trading, I tend to enter at market because it moves very quickly on the trend. See, scalping dilly-dallies. On the counter trend, the price action dilly-dallies. Can you see it comes down, it goes up, it comes down, it goes up, and then it goes down. So you can afford to leverage. You can afford to go enter level 2, and so you see this candle here, enter at level 2 and let it come up and pick you up and then go down. And gain that extra 2 in spread. But on a trend trade, I just jump in because it moves very quickly. That was a 30 tick. That was a 30 tick move when you ride it 20 or so. Yeah, well, this is a news item. So 10 o'clock is always usually a big move, which I love 10 o'clocks. I always show up for 10 o'clock. If I sit there and I don't see anything exciting, I just wait for 10 o'clock, and I trade the trend at 10 o'clock. Can you please show us the best entry for a trend trade? I will do. We're going to do this again in just a second here. We still have time. We're going to make entries in just a second. Right now, I just want you guys to get the visual of north of the border or south of the border. That's the rule we want to get down. And we want to understand what does that really mean? North of the border or south of the border in reference to the HMA trend line. So what does that actually mean? Because you're going to see sometimes the 1 minute is north of the border, as you see here, and sometimes the 3 minute isn't at all. But what is this? This is strictly a 3 tick move inside of a 5 tick window. That's all that is. It's a scalping move. Until this goes north of the border, then we have a new trend in the new direction, which is our reversal trade. So notice that even though we've got green candles, I can trade this because the 1 minute is north of the border, but I have to be out by the time I hit resistance. I cannot stay in, and now this is red. This is north of the border, but it's a red candle. So I can't stay in the trade because it's a red candle. This could come crashing back down. Watch what happens here. If you don't obey this rule, watch what happens. So it has to be the right color. This has to be a green candle. See? Now, am I going to trade short here? No. Why? This is a very good example. I'm going to pause it for a second. Am I going to enter short here? Why would I not enter short here? Even though I have a nice touching candle. It could potentially go, but why would I choose to miss this particular one? R3 pivot? Well, not so much the R3 pivot, because you will notice that on trend trades, let me talk about trend trade, which I will cover next week. Okay, regardless of the pivots, trend trades will cut through pivots like a hot knife through butter if it's on the trend. So right now, can you hear me? Do we have sound? Do we have sound? Okay. So notice that the 3 minute, even though the 3 minute candle is red, the problem we have is that it's above the HMA. So the fact that this candle is now above the HMA tells me this could go long. This could turn to green in a heartbeat. And this could all turn back to green in a heartbeat. Let me show you. Now, I happen to know it goes a little lower there, but I'm just doing this for the exercise. Here's a good one. You see, this is where you guys get caught. It looks like it's going to go, but it's as long as it's hitting that HMA and it's not below it, your limb rakes have not crossed it, it is not south of the border. It has not penetrated it. It has not penetrated it. I want to get in on a move something like this. We are already south of the HMA. That's what I'm looking for. But as long as it's in a maybe zone, it could turn on you in a heartbeat. And you can't tell which one it's going to do. So it's a maybe situation. It could go. Sometimes it does. Sometimes it doesn't. And the fact that it's not already there below means you can't take it. See, sometimes it goes, but then it still turns around. So I'm looking for something like this. and this isn't it. So I'm not entering short here. Now watch it develop here. So open, high, low of the candle does not matter in general, just the candle. Exactly. Open, high, low of the candle does not matter. I want to see the limb breaks have crossed, the actual body is below, and ideally that HMA must be red, or the limb or turning to red. Now you can see the candles going below it. Okay, now you can see that the candles are going below it. So from this point on, I might consider jumping in and doing a short trade, maybe to the R3, because the 13 is very far away. And how do I know that this is not going to be a really massive trend line, trend opportunity like at 10 o'clock? How do I know? What am I looking at to tell me that this is, if I'm going to take this, I'm probably going to treat this as a short scalping trend opportunity, not a 20-tick move? How do I know that? Who can tell me? What am I looking at to tell me? See, we're below the HMA now. The limb breaks have crossed. So I can scalp on this candle, 3 ticks. But what am I looking at? R3? No. Yeah, the R3 is a factor, but it's not the most important thing. The HMA on the 3-minute chart, that's correct. Whoever said the HMA on the 3-minute chart is absolutely correct. So you can see real time this candle developed very slowly. So from here I could see, I could trade the high of this candle and grab, maybe 3 or 4 ticks. So I'm scalping on the trend here. But look at my candles on the 3-minute chart. The fact that they're above that HMA, they're hitting the HMA, I'm now treating that HMA as support on the 3-minute chart. And you could do the same with the 5-minute chart. I'm now treating that HMA as support. Let me do this. Yes, you get a cookie. Anybody who said the HMA on the 3-minute is what I'm looking at. So my eye is always doing this. This is what my eye does. I look at this. Oh, I got something. I look at this. Oh, it's not very strong. Not very strong. Now, my 5-minute happens to be below. The reason that this went above is because of gap trade. So I would be taking this trade, but I'd be out here, right? Look, it's going green already because the 13 is a little far from the R3, and I'm treating this HMA as support. This is support because the candle is above it. Very important that you see that. And you're going to see that happen on the 5-minute chart too. See, this is what I'm looking at. Can you see here on the 5-minute chart at 6:15? These candles here, the HMA is support. That's what I'm looking at. So I'm looking at the 3-minute from the same criteria. HMA support. So I can trade inside these candles and scalp inside this candle, the open, high, low, close. I can trade, but nothing more because the HMA is support. So as long as that 3-minute is the candles are inside, this HMA is support. You have to follow that rule in order to not get whipsawed out of the market. It doesn't matter if it continues a little more red. It's a maybe probability situation. You don't want maybes. You want the sure thing. You want to bet on a sure thing. That's what you're looking for. So to be consistent, you just go with what you can get and stay within this criteria. The 5-minute timing is wrong. Yes, I was just using the example of what support looks like. You see here, look at the 1-minute chart. Even though we have the red candle on the inside of the HMA and it's red, I can trade the open, high, low, close of that bar. I can scalp from the top of the bar to this bar, but I have to see, as long as we're on the inside of the HMA, we're north of the border, the HMA now becomes a support trend line. If we're below the HMA is a resistance trend line. Is that clear? And this rule applies on all time frames. Now, let me show you one other thing. I'm going to speed this up because I want to show you a couple more examples. And we still got time here. We'll get to trade a couple. Now watch here. So we managed to squeeze a little bit through the R3, finally now that the 13's catching up. But can you see all this time we're still above the HMA on the 3-minute chart? See how it's come down to the actual HMA and tested its support level. It's testing that level. And see, look, now it's going long in the counter trend. So this whole time it held true to the support of the HMA. The very fact that those candles were above it, can you see how that HMA held true to the support? So it's very important that you see that. Because now, as long as you see that and you see you got yourself a counter trend criteria coming up, you got yourself a nice little gap trade show up, everything's above, you got green, you got yourself a little perfect trade here. There's your stows all smashed together at the bottom like Barbara likes. And there's your MACD crossing. What do you know is you got that 3-minute is always being above the HMA the whole time. So rather than saying, oh, I'm going to go for a nice trend, yes, you could trade the fact that the 1 minute is below the HMA here, steal some nice little 3-tick trade or a 4-tick trade here and be out. But what you know is all you have to do is wait for it to finish and hit the support of the HMA, see your counter trend, and you're ready to do your trade long. And the 3-minute told you that was coming because it was always above the HMA. Can we use the HMAs for entries instead of the 13? Yes, you can. You can use the HMAs for entries instead of the 13. That's why I'm giving you this. I created this simple chart. There's a simple chart. So now you just use the 20. That's a nice view. And there's your HMA. Very nice and simple. Look, they're in sync now. See how clear this is? Okay, I want to show you one more, and then we'll trade a couple. So now you can see we're continuing long. Why are we continuing long? Because look at your 3-minute. We're still above the HMA. Now we hit some resistance. We hit the moving averages, so obviously the 1 minute's going to bounce. What do you mean anytime candles above or below always treat as support or resistance? Anytime the candles are above or below the HMA trend line. Here. Let me do this. Less is always more. So the only indicator we're talking about right now that you should be looking at is this HMA color change trend line, the red and green line. That's all you should be looking at. And you're looking at the candles in relation to it. So as long as the candles are above it, north of it, I call it north of the border. So think of this as the border control. Okay, here's America, here's South America, right? As long as we're on the America side, we're north of the border. As long as we're on the southern side, we're in South America, right? So if we're north of the HMA, you cannot go down to South America. This HMA is the border. It's support. Remember, anything that's above a line, the line is support. Anything that's below a line, the line is resistance. Think of it as the house, okay? The ceiling and the floor. So anything that looks like a ceiling, it's resistance, and anything that looks as a floor, it's support. So if we're coming down to something, the HMA is support, like the R3. This R3 is support because we never penetrated it. We're coming down to it, so we're still north of the border. We're still in America. We haven't crossed to South America yet. Is that clear? Or Canada and USA, yes. So right now, we're trading in Canada because we're north of the border. We're not trading in America, okay? So this HMA is your border. Okay, so is that clear? You cannot miss that concept, because if you miss that concept, then you've lost, you cannot connect the dots and you've lost the whole message. So you must get it. So please make sure that you let me know if it's not hitting home. It's because we've got too many filters up. We've got to clear the cobwebs. We've got to get rid of those filters. We've got to just focus on one thing. And we're not talking about fractals and circles with the dots. You guys are distracted. We're not talking about Linregs. What are we talking about? We're just talking about the HMA, guys. That's all we should be looking at. The candle body in relationship to the HMA. This alone, as a rule for trend lines, if you use your HMA correctly as a trend line rule, then you will stay out of a lot of trouble. This one indicator will keep you out of trouble. And the rule is this: are we trading north of it or south of it? Is the body of the candle north of it or south of it? And how many time frames are in sync? So right now, can you see the 1 minute is south of the HMA, but the 3 minute is not? Look at the whipsaw. If you entered here, you would be biting your fingernails right now, wondering, is it going to spike up? Is it going to be an HFT bar like this? Did I just get stopped out? That's what you're wondering. Can you see that? So if you were going to trade that move, you would have followed the gap trade rules, and you would have waited for the circle with a dot to appear, the Linreg V, the dotted circle with a tail wick. So there would have been our circle. We had resistance. As soon as the Linreg turned, you would have jumped in and taken 3 ticks inside of a 5-tick move to the 13 EMA. That's all you got as a criteria. That's it. And what told you didn't have anything more than that was your 3 minute is still north. We're still trading in Canada. Your 3 minute is still north of the HMA. The body of those candles is still north of it. It's not south of it. So let's see when it does go south of it. What's the HMA? The HMA is called the Hull Moving Average. It's a moving average just like your EMA, but it's a different kind of moving average. It's the Hull Moving Average, and you can read up more about it in section 7 of your self-paced course. So it's actually the HMA color change is the Hull. It's called a Hull Moving Average. It's just another kind of moving average. It has a different calculation to a regular moving average. You would use the same rules when using the Segredo. Yes, same rules when using the Segredo. Absolutely. That's why I'm showing you this rule. Is it a lagging indicator? No, it's not a lagging indicator. It's perfect in that, remember, when it comes to leading and lagging concepts, The truth of the matter is all indicators are lagging because the price action has to show up in order for the indicator to calculate and populate. So by definition, all indicators are lagging because you have to wait for the price to show up. However, some indicators react more quickly to others. So what the nice thing about it is you don't want an indicator to react too quickly because it could whipsaw. So you want an indicator to kind of be medium, not too slow, not too fast, kind of medium, so it filters the fast moves and it's not too slow to get you late. And that's why I like the HMA, because it's one of those medium indicators. It's not as fast as the Linreg 4. See, if you look at this chart, can you see here that the Linreg 4 changed very quickly? The Linreg 4 is our fast indicator. It reacts quickly, but it can also whipsaw on you. So you can see here, it changes very quickly. So what you want is a medium indicator like the HMA. So when it does change, you know that it's going to go from A to D. So if you want to trade from B to C, you're likely to get in. So now look at the price action here. Here's my 3-minute candle is below the HMA. Now I'm looking to trade. I'm in this move here, trading from the time this candle shows up. I'm in this move here, going short. See, my HMA is red and my candle is red. 13 crossed the 20 also, yes. Yes. Okay, so now let's do this. Now we're at 11 o'clock. Most of you should be getting out of the market already. Let's do this. We're going to go back to the beginning. Okay, we're going to go back to the beginning. See, notice even though we had the spike green candle here, we're still below the HMA. We're still below the HMA. This is where your trend is. Can you see that? And this is what I mean by if I'm in a trend trade, let me use this example because this is a good example. If I'm in a trend trade, a lot of people ask me about my stop. Let's say I enter here. I didn't enter at the top, so I'm entering a little late to the party, entering down here. I should have entered more like here, then it wouldn't really be an issue. But I entered here, so if I entered here, I would have had to suffer. Let's say I got in at the low of this candle, 44, and this spiked up to 49. So can you see that 44 to 49? What's that? 4 ticks, right? 4, 5 ticks. Now, watch what happens. That's why I have a 12-tick stop on trends, because look, my price is below my moving averages, so I can clearly see I've got a trend happening. My MACD is crossing through the center line, so I know that I'm in the trend, and my HMA, my 3-minute is below the HMA. So even though when 5 ticks above me, okay, 5 ticks above me, what I'm looking at is the fact that I'm trading on the trend and my 3-minute is telling me to stay the trend. And if I look at my 5-minute chart, look at my 5-minute chart as well. It's doing the same thing. So can you see that my 5 and my 3 and my 1 are all in sync? All in sync. They're all below the HMA. We're all trading in America right now, not Canada. So even though the 1-minute went into Canada territory, briefly, I'm not going to let that keep me out of a trend, because I'm going to take my direction from my 3-minute and 5-minute view. This is what I'm looking at first. My 1 minute is a short term. I never let my 1 minute tell me the real trend. I only use 1 minute to tell me when I have a scalping opportunity, when I'm doing those 3 tick inside of the 5 tick moves. That's all I look for my 1 minute for, and to get in nice and early on my entries for my trend. But I'm looking at my 3-minute and my 5-minute to tell me, where is the trend? Is the trend long or is the trend short? So let's do that. Let's make some real-time entries, and we're going to trade this to see how much drawdown we really get. Can you hear me? Can you guys hear me? Okay. South of the or north of the border concept is so important. It is. It's I tell you right now, if you guys learn nothing else and you just learn this, you will always get your scalping trades right, and you will always get your trend trades right also. So what am I separating for you? I'm separating what's a scalping short-term move and what's a trend trade move. That's what I'm separating for you. And it's all to do with north of the border. See here, or south of the border. Here is a scalping move to go to the 13. Okay. Here is a trend trade move because we're going away from the 13. And we're using our 3-minute to help us decide which is which. So let's do this. Let's go back to the beginning, to 9:30, and let's actually execute following the timing. And I'll use the 1-minute full chart so you can see it. And I'll use the 3-minute simple chart. See, I made a nice simple chart just using the HMA. That's all you need to see from the 3-minute chart. You can do the same with your 5-minute chart. Okay, let me take it to 9:28. Can you guys hear me? Okay, so I'm going to pull up my little dome, and then I can show you. Here's my dome. I can show you the 2 different types of execution. Okay, so here we are. So now, as you can see, we're on the 200. We're on the 200. So the rule is you never want to enter on the 200, period. I don't care if this candle's shooting up to the moon. The fact that it's touching the 200, do not enter a trade. Why? Because you want to think of the 200 as a magnet. You have to wait for the body of the bar or the tail of the wick to be away from the 200 by 2 ticks before you enter. See, now I can enter the 200, I can enter the trade going long because the body of this, or the wick of this tail, is at 92.54 and the 200 is 92.50. We have cleared the border by more than 2 ticks. If it's within that 2 tick range between 90.50 and 90.52, wick or body, the magnetism of the 200 is so strong it can whipsaw on you. That's why I tell traders, and I can't tell you how many people still make this mistake. You cannot, I'm going to say this again, You cannot enter, and I'm going to cover this next week when we talk about support and resistance. You cannot enter a candle that is close to the 200 within 2 ticks. I don't care how big the bar is. I don't care if the bar goes up for 10 ticks. The fact that it is touching or within a 2-tick range, you may not enter the candle. Is that clear? You are breaking the support and the resistance rule that govern support and resistance. You are breaking that rule, and that's why you get whipsawed. Okay, so now I may enter on this bar because it's more than 2 ticks away. It's broken away. The bulls have won the battle. This is the battleground for the bulls and the bears. They say, are we going to go short? They say, no, we're going to go long. We're going to go short. No, we're going to go long. And once they clear more than 2 ticks in spread away, and if you're going long, it has to be from the bottom of the candle. If you're going short, it has to be from the top of the candle. Then you know we have broken away from the 200. I thought the 200 doesn't count on the 1-minute bar. No, that is the only place it does count. The 200 SMA is a 1-minute indicator. Notice on my other charts, the 200 is not present. On anything that's not a 1-minute chart, we only use 4 moving averages. The 200 is strictly a 1-minute indicator. That's the one place you are using it. And it's the only place you're using it. Okay. What about the 50 and the 100? I don't care about that right now. Okay. I don't care about that. What we're looking at right now is a possibility to go long. Why are we looking at a possibility to go long? Because look at my 3-minute chart is now going north of the border. So we're going green and we're penetrating going north of the border. So and because we're on a counter trend, normally we may miss this move already, but let's have a look here. I'm going to just put 2 contracts on. Normally you can do what's called a level 2. See, here's the price. I can go in at a level 2. That's what you can do. So can you see, because we're on a counter trend, it comes down and picks me up. So I've gained an extra 2 ticks on the spread. See, notice that the 13 is not crossed. Notice from last week, it has not crossed. Now this is 9:30. I wouldn't normally enter at 9:30. Okay, I'd like to wait until after 9:30 before I enter my moves. But what are we looking to do? Look, we got the stoves at the bottom, we got the MACD crossing, and ideally I like to wait till this bar. Can you see here, the 3-minute chart? Notice I suffer no heat from this bar because now the HMA is green on the 3-minute chart, and we are clearly above the HMA. This is the perfect time to enter. This is where I'll be entering. And because we're in a reversal or counter trend, I'm just going to go for 3 ticks on this. Notice that I'm not suffering any heat. There's no stress. There's no major whipsaw at the moment. And I'm simply trading. I'm ignoring these moving averages. Why? Because we're in a reversal. It's going to cross those moving averages, and my HMA on my 3-minute chart is north of the border. We're trading in Canada right now. We're not in America. We're trading in Canada, and it's my HMA has changed color from red to green per my 3-minute chart. Regardless of the 50 and the 100, I don't care about the 50 and the 100 at this particular point. Because why? So, and then we just got our 3 little ticks. Okay, I'm trading at 2. Now watch it probably go through the 100, but I can, I'm not I don't care about the 50. I'll trade it to the 100 because the 13 is a little far from the 100. So if it's going to whipsaw anywhere, it will whipsaw on the 100 because remember what I always say? I always look at where is the 13 in relation to my next barrier. The fact that the 13 is so close to the 50 and the fact that we are in a trend change, a reversal, according to our MACD, and our stows are all nicely lined at the bottom going long, the probability of it continuing and breaking through that 50 is a lot stronger. Also, the real reason is that I'm trading the bounce off the 200. That's the other reason. This is a strategy in, if you go to section 5, it should be in there. It's one of our strategies. Bouncing off the 200 is a very nice strategy to do. And you can Can you hear me now? Can you hear me now? Can you? Yes. Okay. So the bounces of the 200 SMA are very nice strategies to do because when things are lined up like that, like this example here, you don't care about the 50 SMA. Anything that's very close in range, the bounce of the 200 is stronger than the 50 SMA. Stronger than the 50 SMA. So things lining up, you don't care so much about the 50 SMA at that particular point. Okay, very nice strategy to do. All right, so that's what I'm trading. Trading of support, and I'm trading because my 3 minute is going above the HMA. So let's do the next one. Now, entered at a level 2, 2 ticks below, because we were on a counter trend because the 13 had not crossed that 20 on the 1 minute chart. If the 13 has not crossed it, it's on a counter trend, and it will dilly-dally on account. It will go back and forth, so you can gain those extra 2 ticks in leverage. Now, once it crosses, it's on a trend. So I'm just going to fast forward it here because it's going to continue a little higher. I want to go to the next real opportunity that I want to look at. See, and what you can do, instead of just going for 3 ticks on these reversals, you can do, let's do this again. Actually, let's do this one more time. I'll show you here. Let's go back to 9:30 because I want to show you. When it comes to reversals, you have 2 options. You can either just go for 3 ticks as a counter trend, or you can go for a little bit more. Going in for 2 ticks, right? And you put your, going in for 2 contracts, not 2 ticks, 2 contracts. Then I put it on none. I do bracket orders for these. I change it to 1. I put my first contract at 3. So now I'm looking to get my 3 ticks. Here's my 3 minute candle above the HMA. Perfect timing. And I can then look to see if I can maybe go for 6 or a little more, depending on when my 1 minute changes. So let's see what we can do in terms of how many ticks we can grab. And you can only do this on reversals or trends. You can't do this on gap trades, okay? The scalping ones. So the 3 minute has to be north of the border, matching the 1 minute chart to do this, because that's when you know you're on your trend. And ideally, your 5 minute also. As you can see, the 5 minute is also doing the same thing. Yeah, I can change the 5-minute chart to my simple chart. I call it my naked chart. So there's my 5-minute chart. So you can use a 3-minute or a 5-minute. It'll do the same thing. I just like the 3-minute timing for currencies. Do you wait for the first green candle to go long that's above the HMA? Yes. Well, you see, this sometimes it can be a little tricky when it's squeezing through. So if I'm not sure, I'll wait till the close of that bar and catch the next candle. So wait for the one that's squeezing through, penetrating to close, and jump in on the next candle. Then you won't suffer any real drawdown. But if you want to do a level 2 entry, you can do it on that first candle, because it will go up and down, up and down. Okay, so now notice we're going to get our 3 ticks. So let's see how it plays out, what we're looking for to get more. So now we can see that our 3-minute is still green, it's still above the HMA. Our 1-minute is still green above the HMA. So do I necessarily need to get out yet? My MACDs and my STOs are lined up. Right? Now this is going a little red. But we're still trading in Canada, and the HMAs are still green. We have the circle with a dot, but we don't have an asterisk. So I could say, well, maybe I'll wait till the asterisk, because I can always move this down and grab a few less ticks. That's okay. I still got more than I bargained for. The STO 20 is pulling away. No, the STO 20 is always going to be faster, because it's actually not pulling away so much from the 50, because it's on calculate and bar close false. Does this work well with the 5-minute and the 50-minute chart combination? Yes. You can do this with any pairs of time frames. So we're still trading in Canada. Let's speed it up a little bit, because I've got to show you a couple more trades. See, we didn't get the asterisks. Not yet. Now, you may not get it right all the time. It may not go all the way up like you hoped. Sometimes it'll come back down, right? And you get the asterisks, and you go, oh, I should have gotten my 6 ticks. Now you would have to move it down here and only take 2. It doesn't matter, because the times that you are going to get it right, you're going to grab more. So you only took an extra 2 some of the time. It doesn't matter, okay? Because you still took 3 plus 2 is 5 ticks. Do you see what I'm saying? Doesn't matter. So now you see clearly, I've speeded it up for you. You can see clearly that we got the asterisks here, a fractal shown up. We had the circle with the dot. These are coming to red. You could have gotten out at a 6-tick range or a 7-tick range, taking your price action. And even then, look, it hasn't really changed direction, because we're still in Canada. We're still trading in Canada. We're north of the border on that 3-minute chart. So as long as we're north of the border, potentially we're still going long. So you guys can play with this, with the second contract, and decide, when I see it shoot up, maybe you take the high of that next bar when it shoots up, and you get more price action. There, shots up maybe to the R4. I tell you, the runs to the R4 are the best. Whenever you're in range to go to the R4 and you're this close, you can always bet that they're going to go to the R4. Watching you show you anyone must be able to take the heat. But look, no, you missed the point. There was no heat. There was no heat. Look where our entry is. There was no heat. We took 3 ticks. Look where our entry is. We were in profit the whole time. There's our entry. Our entry was at 92.56. This red candle came down exactly to 92.56. Our entry price. There was no heat. And as long as we're still green and we're not taking any heat, what do you care? And chances are if I caught this bar a little lower, I probably wouldn't have gotten any heat at all. I already took 3 ticks. I'm still in the profit. Even if I take another 1, I've gained 4 ticks instead of 3. Just to take the chance on betting that it could go higher and I can get a whole lot more. So there is no risk there. You were in the profit zone the whole time. Why are we in Australia? Is euro no longer your favorite? No, I always trade the Australia and the euro. The 2 markets, I trade them both. But if the euro's all banged up like it was today because it was on a counter trend on the higher time frame that was all messed up, then I go trade the Australian dollar more. So today the euro didn't perform well. Every other day this week the euro's performed really well. So I was trading the euro yesterday and the day before, but today the euro absolutely stopped. It was just not happening. And that it's not always a perfect world. You gotta go with good with the bad. It's not always perfect. And it was really just because the higher time frame was in its counter trend, so it was whipsawing all over the place. And there were some funky things going on in the market today. What was the higher time frame of the 6E counter trend? The 120-minute and the 240-minute were doing their gap trades. All right, so now let's continue on to the next one. But I just want you, so you see, once you first practice timing it above the HMA or below the HMA, and you take your 3 ticks or your 4 ticks, whatever, once you've built your account up and you've got your confidence up, then you can afford to ride things out because you're in the money. There's no risk. But when you're the new person that just started with your little account, then just go for 3 ticks every time we're south of the border or north of the border. Just go for 3 ticks. And what I do is I'd rather you just go for 3 ticks with 2 contracts. Start out with 1 contract for the first month. But then by your second month, go for 2 contracts, 3 ticks. You'll make $250 very quickly with no stress. Okay? No stress. 2 contracts is only $1,000. You're making 20% return on your investment every single day. No stress. So don't stay on 1 contract forever and a day, because you won't make money fast enough, and you start to do extra trades and do crazy things. You want to quickly go from 1 to 2. 2 is not a whole lot more riskier than 1. But first, make sure that you got yourself all you got your timing down before you go from 1 to 2. Don't just trade with 2 if you're the novice guy and you're just getting started. Start out with 1 contract, kick the tire a few times, have a few oopses, get it right, follow this HMA rule, and then once you're getting it down, do 2 contracts, 3 ticks. That's all you need. 3 ticks you'll get it very quickly on every time it goes north of the border or south of the border, and you'll make $250 every day very, very quickly. And if you can do that, watch this. Okay, let's move on to the next one here. We're going to do this one coming short. Blow up a couple accounts. Yes. Blow up a couple accounts. Everybody loses money. You cannot be a good trader if you haven't lost money. I'll tell you right now, because you don't understand what you can and can't get away with. You got to, it's a process. You got to work through all the oopses before the rules really sink in. You go, oh, goodness, I can't trade on the 200. Now I got it. I learned my lesson. I'll never do that again. And it takes a few mistakes to really learn, for the rules to really sink in. We've been talking about the 200 SMA since yesteryear, till I'm blue in the face, and lo and behold, people still do it. So you have to get spanked a few times before it really sinks in. It's part of the course. Okay, so don't be frightened to have a few oopses. I love getting these emails where they go, I lost $200 and it's like the end of the world. You got to know, when I get an email like that, I'm laughing on my side. Okay, don't sweat the small stuff. You're in it for the long term. This is a business. Okay, I hold the record in losing money. I've lost thousands of dollars. Barbara's lost thousands of dollars testing these strategies. If anybody you should be licking her wounds is Barbara, because when she developed the strategies, they didn't have a simulator. She had to test them with real money to develop these strategies with her own hard-earned dollar. They didn't have a simulator back in the day. That came much later. So don't sweat the small stuff. You got to keep your eye on the bigger picture. Okay, so you lost a couple of $100. Okay, so you blew up a $2,500 account. It's not the end of the world. You're in it for the long term. So go back, revisit your rules. Okay, you didn't follow the rules. Revisit them, revise them, learn them, and then you stick to them. Okay, let's do a couple of more here. Okay, so here we are at this, now we're south of the border again. Notice that our 3-minute is south of the border. Our 5-minute is going, so we're going in for a reversal short. Okay, now watch here, because let me do this. I'm going to go short here. Sometimes you'll see that the candle will go south of the border, but the HMA hasn't changed red. So sometimes it's better to wait for the next bar if you think you're in a reversal mode. See, here we're going in a counter trend. If the HMA hasn't changed red, even though the candle's below it, sometimes, especially on the counter trend, or if you're on support already, you can still suffer a little heat, which is what I'm going to demonstrate here. We should get a little bounce here. You can still suffer a little heat. So you might want to wait for the next 3-minute candle for that HMA to change color if you want to minimize your heat here. So again, I'm going to do my 2 contract story, and sometimes it's not. If it's ready to rock and roll, it's ready to rock and roll. But as long as that 3-minute candle is below that, we're now trading back in America. We're south, and look, I got my 3 ticks already. 3 ticks, and there I got 6 ticks. I'm done. Simply by waiting for, seeing it, look, now it's changed color. Waiting for that candle to be below or above the HMA on the 3-minute chart. Now you see how the 5-minute HMA hasn't changed color yet, which is why I prefer the 3-minute on currencies, because it gets you in a little earlier. And because currencies don't give you as much price action in one bar like crude oil gold will give you 20 ticks in one bar. Currencies will only give you about a 6 tick to 10 tick range in a bar. So because of that, I don't like to wait for the 5-minute. I like to wait for the 3-minute to get in early and get done. If I wait for the 5-minute, see, here's the 5-minute, you can still get whipsaw. Now this is 10 o'clock, so it's a news item, right? So we wouldn't necessarily be trading on 10 o'clock. But for gold and crude oil, it's good to use the 5-minute. What about gold and crude oil? To show those as well in some day? Yes, I will. Okay, so now here's the news trade. When there's a news trade like this, you see how it's spiked already? Somebody asked me, how do I use a news trade? I wait for the spike to happen, and then I jump in and I trade the rest of the red move. Now, sometimes I'll just go for a set amount, like 6 ticks, and let it fill me. Or sometimes I'll just go for, depending how late I got in. I got in a little late on this one, but you'll notice that on a news item like this, it will go red for several bars. But I wait for the explosion first, for the whipsaw to happen, then I jump in on the trend, and I grab a piece of the action. I don't I don't stay there for the whole thing because it can whipsaw again. I just take the meat and potatoes, just like I just showed you here. That's how I trade my news trades, for people who want to know. All right, so let's fast forward here to after the news, and we'll do the next one. Is the ES work the same way on these methods? Yes. I don't like to trade the ES though because there's too many people in that market, too many big boys. But you can trade the ES with the same rules. These rules apply to all markets, guys. A chart is a chart is a chart. It doesn't matter whether it's ES, 6J, crude oil. A chart is a chart is a chart at the end of the day. Okay, so here we are. We're coming in for our counter trend, right? So the only thing you've got here, if you want to trade this, is a gap trade. This is got the asterisk. This is going above the R3, and we've got a green candle. But could I expect a whole lot? So here you really have to weigh up the odds. Do you want to jump in and go for 3 ticks inside of a 5-tick move? You can certainly do that and grab your scalping move. Would the quant HMA be crossing the gray line when entering the counter trend? Some of the time. Sometimes it's on the trend, sometimes it's on the counter trend. It does both. The cross happens on both. So in currencies, I don't really like to do the counter trend like this, the gap trades on currencies, unless it's a reversal. I only like to do reversals in currencies. The only time I do gap trades is when I do gold or crude oil, which is rare, you know, or it's after a news item. And like NG today, the gap trade didn't happen. So sometimes you can get a doozy too. You know, sometimes the trend is so strong it won't give you a nice gap. The only time I find it really gives you nice gaps are in volatile markets like gold and crude oil and Russell. Russell works really nicely with gap trades too. But on currencies, I don't tend to do this going back to the 13 story on a trend like this. I rather wait for the actual reversal to happen. So I wait for the 3-minute to go above the HMA. Can you see the 3-minute is still below the HMA right now? It's still below the HMA. So, and at this point, we're too close to resistance. So it's not a great trade for me. I don't do these on currencies. I just waste them. I go on to the next one. Is that clear? But I want to, in conclusion, we're going to be wrapping up now. I want to drive home on my next point. If you wait for the HMA and you start with 1 contract and you build it up to 2, like I showed you, you want to at some point get it to 5. You want to go to 3, you want to get to 5. 5 is your goal. If you never go past 5, it's totally okay. At 5 contracts, look, that's only a $2,500 investment, guys. At 5 contracts, you're in some serious money. Let me explain this to you. You want to go start at 1, kick the tire a few times, get your timing right, build up some money, go to 2, double your account from 2. From 2 contracts, you want to get to 3, get to 4, get to 5 very quickly. Don't drag your heels. Don't stay on 2 contracts forever. You want to get to 5 contracts because now you don't have to do so many trades. Now you don't have to do so many trades because watch here. At 5 contracts, you only need to do 3 ticks. And waiting for the HMA north of the border, south of the border to be in the right place, just grabbing 3 ticks at 5 contracts. Guys, watch how simple this is. Really going to drive it home to you guys. For those of you who are losing money and hacking in the jungle, you're going about it all wrong. You're going about it all wrong. You've got to stay focused on the bigger picture here. So let's take a look at what is your game plan. So in conclusion, I'm waiting for this next move. Here we are at, we're going to setting up for a reversal, right? Our trend is now over. Setting up, notice our 3 minutes above the HMA. So we're setting up for our reversals. Those are smashed at the bottom. MACD is about to cross. This MACD is through the center line. Okay, so we're setting up for our reversal here. Now I'm going to go in for 5 contracts. The 5-minute HMA is not above. I remember what I said. I don't wait for the 5-minute for currencies. That's why I use the 3-minute. I only use the 5-minute when it comes to volatile markets like crude oil. I don't wait for the 5-minute HMA on currencies, because you're getting a little too late, because there's not as much price action on currencies like there is on crude oil. Okay, so watch here for a second. Now what I do wait for is for the 3-minute. You see this is the first green candle. On counter trends, watch here. I usually wait for the 3 minutes second bar. Okay, notice that this is the first bar. So when it comes to counter trends, not on the trends, and counter trends, that's why I want to show you this. If you don't want to suffer any heat, because you notice that on the first candle, we're usually at the 13 on the 1-minute chart. Now, if it's going to reverse, it's in this type of situation, the fact that it's above the HMA, I will ride it out. But if you want to avoid this kind of heat, I usually wait for, see the 3, look at the fancy bar timer at the top. It's telling me when the bars come to end. I usually wait for this bar to close, and then I jump in on the second candle, and now you can see you won't get any heat. You won't get any heat, as much heat, if you wait for the second candle to go above the HMA. Okay? Is that clear? And obviously it must be green, not red. So that's the only other thing that I would suggest for counter trends using the 3-minute chart. Now for trends, I don't wait, I just go for it. So I want to make that real clear, which is why I'm showing you this demonstration right now, so you can see when it comes to the counter trend, the 13 hasn't crossed yet, we're still in counter trend mode. And I've always taught this since 2006, well 2009. I've always taught on counter trends, I wait for the second green candle on the 3-minute chart before I enter. And then basically you're trading the reversal. You're trading that perfect trade. And if it's red, you wait for it to be green. But the fact that we're trading in Canada right now, we're north of the border per the 3-minute chart, gives me the confidence to stay the trade. And if I look at my 1-minute, we're all set up. Stows are at the bottom, the MACD's about to cross, we're north of the HMA is all green. So this is the one place I would ride out any heat. It's not a huge amount of risk. It's 3 or 4 ticks at the most. It's not you're not risking everything. Now watch this. At 5 contracts, I'm just going to speed this up because in conclusion here, I'm going to conclude this for. Look, I got my 3 ticks. That second bar, got my 3 ticks. And you'll notice from the second bar, even if you get in on this bar, I got in on the first bar, you're going to notice you're still going to get your 3 ticks. You're still going to get your 3 ticks. Now, let me just get out the calculator. The reason you want to get to 5 contracts, guys, just do, let's say you're trading a currency, 12.50 a tick. is 187.50, right? 1 3-tick trade. Times 2 is 375. All you need to do is 2 of these a day. You've got 375. 2 measly little trades. Two trades a day. Trading in north of the border on the 3-minute HMA or south of the border. So 6E is 1250, 6A is 1250. Trade a currency, use the 3-minute chart. Start out with 1 contract, go to 2, then go to 3. Don't take 6 months getting to 3. Okay? Just do 4 trades a day, trading the HMA like this on 2 contracts. Double your account, get to 3, get to 4, get to 5. And when you're at 5 contracts, you want to get to 5 as quickly as you can. Because then it's really a viable business once you're at 5 contracts. Now you don't have to do so many trades. Now you have 1 account with 5 contracts that you're trading with. You do 2 trades. At 375 a day times 20 trading days in a month equals 7,500 a month. How many people would like to be paid 7,500 smackaroos a month in 2 trades? I certainly would. Actual time in the market would probably be 10 minutes. Sounds good to me. So, okay. So 25, 5 contracts, 2 trades a day. Now you're making 7,500 smackaroos a month. You take 2,500 after your next 30 days out and you open up a second account, a sub-account. This is money management and risk management, because now you're just trading 2 trades a day, so your risk is minimal. You're not hacking in the jungle, trying to chase everything, getting whipsawed out of the market. You're just waiting for your HMA color change with 5 contracts, 2 trades. Take 2,500 bucks out after 30 days, pop it in another account. Tell the broker to give you a sub account. You want to trade different strategies, and now you start the game all over. You trade your 5 contracts, 2 trades, and then you go do 1 more trade with 1 contract in your sub account. We do 2 more trades, and you build that up to 2 contracts, then 3 contracts. You get that to 5. Once you're at 5, you only need to do 2 trades. Now you do 2 trades in your first account, then you do 2 trades in your sub account at 5 contracts. Now you've got 15,000 smackaroos coming in every month. It's all about how you go about it. It's a business, people. You need to use money management. Stop chasing indicators. Stop looking for the perfect indicator. Stop trying to chase the market. It's very simple. You follow some simple rules, you get your timing right, and you stay focused on that timing, and you forget the rest. Don't do the other stuff. If you decided your rule is HMA color change, I'm only going to trade when the 2 are in sync, north of the border, that's what you stay focused on. You're not over here and over there and up at this and up at that and trading this. You stay focused until you're making some serious money. Once you're making serious money, then you can go try this, that, and the other and blow up a sub-account. Who cares if you blow up a sub-account? You're going about it all wrong. Stay focused, stay true to the rules, and build your business as quickly as you can. Can you guys hear me now? Okay, good. So you got to make it a viable business, guys. But you got to use some strict rules and guidelines like any business, otherwise you will implode. So you got to follow a rule. And you got to stay focused